How's it going, everybody? Today we are discussing the market outlook for the week starting November 17, 2025. This video is going to be both covering indices as well as a little bit of a watch list. Now, in terms of a watch list, I am not very, excuse me, interested in um, sector by sector stocks right now. There's a couple of different reasons for it, but all boils down to right now the risk reward is just much more or rather the uncertainties in the market are much more macro based than they are micro focused on the specific companies. Okay, when macro conditions are a given and we don't have anything to worry about, when there's a lot of certainty in the mix, then we can go ham on these specific companies because it's like we have the base case of a good environment in the background already fulfilled, so we can now look into these high profitability, high opportunity stocks and everything in place. When that isn't the case, though, you really need to be paying attention to the indices, right? It's kind of like in crypto. In crypto, people don't really want to be paying attention to the Bitcoin all the time. Unless Bitcoin is up, they don't give a fuck about it, really. What they what 99.9% of crypto participants want to be looking at is their shitcoin of the week. Okay? Um they want to be looking for the next 100x opportunity. They want to be looking for, the next pump fun meme coin, right? The next big narrative, whether it's NFTs or DeFi or, cat coin memes or Trump coin esque memes, whatever it is. The market, when conditions are good, will go very much risk on and then focus on these specific narratives, sectors, etc., that can provide a lot more value and profitability. But when that isn't the case, when Bitcoin is, for example, dropping below 94K right now as we speak, then the market's very concerned about what Bitcoin does. And no one's talking about, like, fuck, dude, my fucking pump coin shit coin is down like 80%. It's like no one cares right now, dude. You know, King Bitcoin is bleeding, everything else bleeds because of it. You know what I mean? So if King SPX, if King Nasdaq starts to bleed, you can forget any other, stock or anything. We're not going to be really focusing on those up until we see some bottoming going on across the sector. That isn't to say that we can't go into, you know, swing trading just in the opposite directionality, as in just shorting these companies. Absolutely can do that. But right now, it's more so of a, if the uptrend is breaking and we're going into a bear market, or the bull market is at least done for now, and we're going to get very choppy sideways conditions, um, then it's important to be paying attention to that transition. Much more important than even trying to find new plays. But a little sneak peek for you guys to look into yourselves for companies are the following up here. So I've identified three sectors that are incredibly bullish to varying degrees or have a lot of opportunities. So first of all is Nvidia. It has earnings this week. Um, Nvidia always has earnings odds stacked against it because it's got the world's weight resting on its shoulders. It's going to be hard to outpace expectations to the extent that the market has already raised the bar up so high. Nonetheless, it's very important to pay attention to, and can provide an opportunity to, make some good money. Now, I don't like playing earnings trades themselves, so I'm not going to be suggesting playing the earnings trade. What I would rather do is play either the earnings run up to, benefit from the increasing implied volatility, or play the post earnings trade once the picture is much more settled and clear and uncertainty is out the picture. Another sector that has been doing very, very good, amidst others going down 50% or more lately, is banking. So companies like SoFi, Bank of America, Goldman Sachs, JP Morgan, Robinhood, and PGY. That's more of a long-term company that I've been looking into. These are all companies that are near highs, have pretty good market structure, still have a pretty defined uptrend, and also have some good catalysts going on for them. And then the other sector is DRAM. So, in case you haven't been paying attention, DRAM is the RAM market is undergoing huge shortages to the point where the biggest companies, the two biggest companies for RAM, Samsung and SK Hynix, are both not taking any additional orders until the next year begins. And the reason why is because they are so backlogged with existing orders that they are uncertain as to whether they can fulfill those, let alone take on any new ones. So the market has been responding very favorably to that news. If you look at some of these companies like MU, for example, massive, massive tear up, you know, had this huge consolidation below. You could call it a cup and handle, whatever. Break, retest, and then as soon as it just got above the EMAs, it never looked back, you know. Went above the 9 and the 21 over here, and consistently the 9 has just been frequent support. I can see this uptrend continuing higher. Likewise with STX, you know, break, retest. This is looks like it could be a nice trade to just go directly long into here. But yeah, so RAM, huge sector right now, a lot of potential. I think these three companies are probably the best looking charts for RAM and also have the most good bullish fundamental catalysts going on for them. Now, in terms of the main focus again, it should be SPX. How are we going to trade SPX this week? Well, I like to keep things simple on the chart, as I've said before. Here we have a very, very basically technically two steps, two main pieces of the chart. It's going to be this trend that has two parts to it itself, the bottom of the uptrend and the top of the uptrend. And then additionally, this SR zone. So you can see over here, resistance here, support here, tore through on October 10th, tried to break through, couldn't, became support over here, sweep below, broke up higher, support here, chopped around here, failed, went to the bottom of the uptrend, broke through, chopped around here, failed, bottom of the uptrend. Then again, when we finally broke it, you can see this was the floor, right? So it was the floor here before we gapped down. It was the floor here after we gapped down. And now you can see actually, would you look at that? It's actually breaking the trend line over here, which was one tap, two tap, consolidation at the EMAs, go higher. Specifically, the strategy is going to be the following. So I don't like any trades in between zones. So any trade between this SR zone and this level over here, the swing high from Friday, I don't like. As you get closer and closer to these levels, I'm much more open to taking trades because the RR gets better. The RR for longs over here at this SR zone technically sounds like it would be the best. Technically, because you'd think, okay, well, you know, you buy right here at the midpoint, let's say. You keep a stop below here. Like, let's say we put it below the swing low here, right? And we go up to here. That is, what is that, 2.6R. And if we're really going ballsy and ambitious, up to here, 6.5 R, right? Reason why I don't like this trade as much as over here is because realistically, it's not really going to be this. If you're doing an options trade on a 0 DTE, uh, the behavior that I'm going to expect around this level is what I have seen before, right? I can just go based off that. And so what I see around this level is a lot of fucking choppiness, right? You'll see the impulses and everything, but the impulses are weakening as time goes on. So I don't, and likewise over here. So I don't really want to position myself for potential choppiness. Where I know choppiness will be the least is probably at breakout levels, specifically breakouts of recent swing highs and lows. So that would be, for example, this one down here, which coincides with the uptrend bottom, and this one over here, which coincides with the swing high after we sweep the uptrend bottom, right? So simple as it gets is going to be that I am mostly neutral around here. I want to see what happens to be able to take a trade. I am bearish below here. I'm bullish above here. Okay. If price goes above here, I'm expecting it to get up to here around 68.50. If price is between these two areas, I'm very ambivalent. If price is over here, almost completely neutral, but I need to be paying attention for how market is reacting to the structure to be able to make a trade. Below here, completely bearish. Then there's another set of conditions that just need to be met in general for all of this. So for starters, if I'm trading a level, I need to, and you'll know this if you watch the videos, three things. One, okay, candlestick. Let's move this. Close above. Okay, you need a candlestick close above or below the SR level. It cannot be a sweep, right? You're thinking, oh fuck, like in real time while this is moving. Oh fuck, it's breaking down. Fuck, I need to panic sell, dude. Fuck. And it goes back above here and closes above, right? And it does that again over here. And you're like, oh, it's fucking over. No, but for real this time. Sell everything, kill myself. It's over. I'm unlovable. I can't win ever. And then it closes above. And you're like, no, but for real this time, look, it's swept even the lows over here. God damn, I am so terrible. I can't do anything right. And then it closes like above again, right? So candlestick closes are super, super important. You need to have a candlestick close. And the candlestick close also needs to be in alignment with the trend recently, right? So you can see over here, the 15-minute has acted pretty good to identify the trend. Not as much over here with choppiness. But for the downtrend, at least, we broke the 15 EMA around here, right? Choppy around here, but conclusively broke down on the 15-minute and the SR level. And this is just the easiest short ever. We broke above the EMA over here and held this uptrend. Easiest long of my life over here on Friday, right? Post a YouTube video about this as well, by the way. Feel free to check it out. Wink, wink. Now, you need that candlestick close. In addition, you need a break. Okay, you need a break and a retest of the key level, right? So I bet you if I zoom in, yep, right here. So you see we broke down, we're going lower, following these EMAs, but what happens? Price dips back into the breakdown level, and then we just continue going down lower, right? So you need a break and retest. Now, this is where things get a little confusing. Because with a break retest, remember the concept of active and static support and resistance. The break and retest does not necessarily have to occur with a key level that it broke off of. It can also occur with the active support and resistance that is forming. That is, the EMAs, right? So over here, for example, we broke through. What you're expecting now is a retest of this level. No, what we got was a retest of the EMAs. Because this whole time, remember, the EMAs have also been active resistance. So if we can get these EMAs to flip while being above this uptrend, that is still a long signal. Okay, so you can get the break and retest of the key level, but always keep in mind, okay, I put those stars over there for you to remember. Always keep in mind that key level can either be active resistance, like EMAs, VWAP, even any sort of active moving part, even if it's, for example, a volume profile range, right? A session volume profile range that's forming up. You can use that, but it needs to show you a break and retest. That break retest is like universal, happens on any combination of chart, market structure, price action, or indicator. Super, super essential. And then the indicator of my choice is, close and hold above. Actually, I'll just write EMA. Okay. So I was going to make it specific to me, but again, you don't need to necessarily use the 921. That's just what I use and keep referring to. But you also want to have the uptrend be supported by the moving averages. Trend supported. All right. That means a downtrend is supported by a moving average if, when the price rises into the moving average from below it, the moving average rejects it, acts as resistance, and price goes further down. If you're in an uptrend, the moving average will support the trend if the next time it dips into it, it acts as support. Support, support, support over here. Resistance, 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 resistance over here, right? Resistance over here. Support over here, support around here, right? So those three things in combination with the key levels is all you will need to be able to trade this correctly. And that is my game plan going into the week. I'm going to be paying major attention to any market structure that develops intraday. Obviously changes day by day, but for now, I'm telling you, for the last since the 22nd of September, we have literally just been in this range, violating this fucking range, doing tricks on it. All right. And out of all the levels, this one over here is by far the most important, and the obvious uptrend that has held intact the whole time since the lows from the Liberation Day bottom. So we want to be paying attention to that. We want to see all three of these signs, and then that will give us confluence as to how we act for the trade. Thank you very much for watching. Hope you guys have a successful and really profitable rest of your week. It's going to be a very, very hectic and volatile week. I can feel it in my bones. But those are the times where you gain so much, either in wealth or in experience, or in grit and belief in yourself and your ability, and just a general set. Like, it provides a huge opportunity to build some resilience. If you get wiped out this week, hope you don't, obviously, but if you do, really be open to taking that on the chin, pause, and getting as much value from it as you can. You know what I mean? The volatility is going to be for sure coming this week. As I said, I can just feel it in my bones. But no matter the outcome, make it useful to you. Hoping, though, that with this video and anything else that you might have learned, you guys will have a profitable week and will make a lot of money. So thank you very much for watching. Have a great rest of your day.